Hello, everyone, and welcome to another edition of your Forex Technical Market Update. I hope everyone is doing fairly well, and we have some very interesting markets here. Uh, on the day, we see that the euro is rallying. Uh, but first, before I get to the euro, back to the Mayweather fight, the so called fight of the century. I wonder if anyone saw that national anthem that Jamie Foxx did. I mean, he has been getting a lot of flack about it to say it was really bad. And my personal opinion is that the anthem was done very badly. It was horrendous, in my opinion. I just found that interesting. I was just reading an article about it before I came into the office here. So Jamie Foxx, no, please don't do that again. Okay, so back to the markets. We're going to speak about a longer term chart pattern that could be developing in the British pound, New Zealand dollar. But first, let me just say what's going on in the markets. We see that the euro declined on the day. Let's go. It was declining on the day. It hit the S2 support point and is now, and buyers came into the market and it's now slightly up on the day. This is the daily chart of the euro currency. What we're looking to see if this market can take out this 113 high, and if it does take out the 113 high, then the next area to challenge is this high just above 115. So that's what we're looking for in the euro. If sellers return to the market, we want to see first if the market can close below the previous support or previous resistance. Let me just draw the line here. If it can close above this previous resistance, and as you can see, the market bounced almost to the pip off of this resistance line, because remember, past resistance normally comes future support. So this area was broken. It came up here and it came down. It was tested once, twice. It was broken, and now the market has retested it again, and it, along with the daily S2, the market is bouncing. So for you day traders out there, that I think the best way to day trade a market is to actually look for these areas of support and resistance and trade the bounces off of these areas. Okay, so that's what's happening in the euro. Let's take a look at the Australian dollar. The Australian dollar is up big on the day. It's actually up against most of the other currencies. And we see that the market, looking on the 4-hour chart, we see the market has blown through its daily pivot point numbers, the R1, R2, R3. The market has traded above these levels, and the next area of resistance, I would say, is this Fibonacci resistance level, which is a 50% at 79.29 and also 79.63 on the Australian dollar. Taking a look at the weekly pivot points, we see that the weekly pivot point is at 80.18, and that also could be another area of resistance for the Australian dollar. So if we're able to climb above these levels, let's say the market climbs above 80.18 and ultimately takes out this high near the 81 level, that will be very bullish for the Australian dollar. So we are definitely going to keep an eye out on that. Okay, moving on to the British pound. British pound is also up on the day. Not as much as Australian dollar, but it's up. It's up on the day, and we haven't blown through the pivot points on the British pound. We're currently trading near the daily R2 on the British pound. Resistance, significant resistance in the pound is at these previous highs here. These levels are resistance levels, and if the market closes above these levels and makes a daily close above this 156 level, that would be very bullish for the pound. If not, support on the pound is currently at the previous low at the 151 level. Okay, looking at the Japanese yen, we see that the market was up on the day but has reversed in the last couple of minutes, the last hour or so. The market has reversed. It was down or up. The US dollar was up against the yen on the day, but has since reversed. But let's look at what's happening. The market is currently trading at the broken trend line. Remember, previous support or previous resistance often acts as support. So what happened here? This trend line was acting as resistance. The market traded above the trend line, and we see that it is currently acting as support for the Japanese yen USD. It's almost trading to the tick at these levels. So again, if we get a strong buy signal out of this level, that could signal further losses for the Japanese yen against the US dollar. Okay, taking a look at the Canadian dollar, we see that the market is still, from the broken channel, the market is still below it. I mean, it's going down very slowly, but let me just draw the channel here. It's a channel that was broken, and the market is going down slowly, but it is still strengthening against the US dollar here. Okay, so let me take a look at the British pound, New Zealand dollar, and I mean, this just looks like a very choppy market. But again, when you're trading, it's very important to look at the larger trends to kind of anticipate when or where the next moves could be. I mean, it doesn't necessarily mean that it will be, but these large monthly moves can put a lot of pips in your pocket if you pay attention to what's happening. Okay, so let's take a look on the weekly charts, and I have drawn the neckline here for you. This is the neckline. This is your left shoulder, your right shoulder, and this is a head. So this is a potential head and shoulders bottom in the British pound, New Zealand dollar, and we'll need to see the market trade above this $2.10 level. You can see left shoulder, right shoulder, head. Let me just compress the chart a little bit. Left shoulder, head, right shoulder. And this could, as I said, this could set up a multi-month move to the upside if this pattern comes to fruition. Now, the market has not come to fruition yet, but as traders, one of our jobs is to kind of anticipate when the next trend will be and look out for trending opportunities, because they can definitely put a lot of money in your pocket. A market that was not in a head and shoulders top, but was in a bottoming phase, was this British pound, Canadian dollar. And this is a weekly chart of the British pound, Canadian dollar. And as you can see, the market challenged for a number of years, actually. Since 2010, market was in a channel. The market closed above the channel, and from that breakout point, moved from 165 all the way up to 195. And as you can see, that's over 3,000 pips. Now, I'm not going to say you're going to capture all 3,000 of these pips, but it's important to look on the longer term time frames to see if we have any opportunities for profit. And I can tell you, these British pound pairs, when they move, they can move a lot. Okay, so I hope you enjoyed the technical market update. Remember, if you are trading the markets, always be on the lookout for trading opportunities. And if you'd like the trading signals that we are speaking about here sent to your account directly, what you could do is click on the link below to get started. Remember, these markets are offering some good opportunities now. We're in a period of choppiness, but we're starting to see things clarify, and the market should start to trend very well shortly. Okay, so thank you very much, and I'll see you tomorrow.